Hey everyone, welcome back to the channel. Today we're diving into a fascinating topic, how the US dollar became the world's dominant currency and why the price of gold is shooting up. This story involves war, oil, gold, and international politics, so make sure to watch until the end for some key insights. Let's go back to World War II. While countries like the US, Britain, and Russia were busy fighting Germany, Italy, and Japan, Saudi Arabia was just chilling in the desert, completely unaware that they were sitting on the largest black gold mine in the world: oil. Around the 1930s and 1940s, American and British companies were scouring the globe for oil, and in 1938, they struck gold, or rather, oil, in Saudi Arabia. But it wasn't smooth sailing at first. The first few wells barely produced oil, but after years of effort, they hit the jackpot. By the 1940s, the US realized something huge. Oil would be the key to not just war, but world development for the next century. So in 1945, Franklin Roosevelt met the King of Saudi Arabia and struck a game-changing deal. The US promised to protect Saudi Arabia and provide military support, and in return, Saudi Arabia agreed to sell oil primarily in US dollars. This oil for protection deal laid the foundation for what's known as the petrodollar system, which cemented the US dollar's global dominance. Scene transition. Fast forward to the 1970s. By then, the US economy was in bad shape due to factors like the Vietnam War, rising US gold prices, and a mounting national debt. The US could no longer maintain the gold standard. That is, they couldn't keep exchanging dollars for gold. So, in 1971, President Richard Nixon made a historic decision. He ended the dollar's convertibility into gold, and the Bretton Woods system collapsed. With that, the dollar was no longer backed by gold. But there was one thing still backing it: oil. Since most of the world's oil was traded in dollars, countries needed to hold large reserves of US dollars to buy oil. This kept the dollar strong and widely used. But as we'll see, things started to shift after the Russia-Ukraine war. Scene transition. In 2022, when the Russia-Ukraine war began, the US froze $300 billion of Russia's assets in US dollars. This was a huge wake-up call for countries like China, which holds around $800 billion in US Treasury bonds. They realized that if the US could freeze Russia's assets, it could also do the same to them. This sparked a trend. Countries started buying goldong as a safer way to store their wealth. In fact, gold demand has skyrocketed in recent years. China has been leading the charge, buying a record amount of gold, and the same goes for countries like India and Poland. But why gold? Well, gold can't be printed. It has a fixed supply, which makes it a safer store of value compared to currencies that can be devalued through excessive money printing. And this brings us to another important point. The US has been printing money like crazy, especially during the 2008 financial crisis and the COVID-19 pandemic. In 2020 and 2021 alone, the US printed around $6 trillion. This causes inflation, meaning the value of each dollar goes down, and countries holding US dollars as reserves are seeing their wealth erode. So now, China, India, and even smaller nations are investing in gold to preserve their wealth, especially since the US dollar is no longer backed by gold or any tangible asset. Scene transition. Let's talk about costs, consumer demand. In countries like India and China, gold has always been culturally significant. As incomes rise, people buy more gold for festivals, weddings, and as a means of wealth creation. In fact, in 2023, Chinese consumers bought a staggering 959 tons of gold, more than India. For China, It's also a matter of investment. The Chinese stock market hasn't been performing well, and then a real estate bubble cause in China has been bursting. As real estate prices drop and the stock market stagnates, people are turning to gold as a stable investment. Graph or visual data display. In fact, Chinese and Indian consumers combined bought more gold than the next 10 countries combined. That's how massive their demand is, and this is one of the reasons why test gold prices have been shooting up globally. Scene transition. Now let's talk about investor sentiment. Historically, gold tends to have a negative correlation with the stock market. In simple terms, when the stock market goes down, the price of gold tends to go up, or at least, gold holds its value better. This was seen during the 2008 recession, the COVID-19 crisis, and even the recent Russia-Ukraine conflict. With economic uncertainty and rising high inflation, more people are turning to gold to protect their wealth. As inflation spikes, central banks and retail investors alike buy gold, pushing its price even higher. Conclusion. So, what does all this mean? Well, the world is slowly diversifying away from the US dollar and turning to gold as a safer investment. As the US keeps printing money, countries are looking for alternatives that can preserve the value of their assets. Gold is becoming more than just a commodity. It's a hedge against economic instability, inflation, and political risk. Whether you're in India, China, or anywhere else, slow and steady investment in gold, like through an SIP, is one of the safest ways to hedge your bets. Thanks for watching, guys. If you found this video insightful, make sure to hit the like button, and don't forget to subscribe for more in-depth business and geopolitical case studies. See you in the next one.